Hi, folks. Today I want to cover how would you go about buying your first stock. For a lot of people who've never invested in the stock market, historically, the stock market provides a decent amount of return for your potential savings versus just keeping it in the bank. So, first, I'm going to cover for those people who do not have any idea what a stock actually is. Next, I'm going to cover the factors that affect the stock price, and then I would actually get into what criteria you can actually use trying to find the stock you want to invest in. So, what is a stock? So, imagine a company or business. Um, it can fund its operations through two ways, either through debt, which is a loan from, let's say, from the bank or bondholders, or it could be through equity by selling shares in the stock market where you and I could buy those particular shares. And based on how much profits the company generates, it's going to pay off that debt and it's going to, let's say, issue dividends on those shares. Now, let's talk about the factors that would affect the stock price. Now, fundamentally, this is based on the demand and supply of the stock shares that are there in the market. And these are further influenced by the company earnings. Now, how much income is the company generating from the operations it has ongoing? And the other thing that would affect it is its expectations in the future. Now, the expectation for a company could be, oh, it's a high growth business. Based on the money it is investing today, it could generate X amount of profits in the future. Therefore, more people would want to buy that stock today. Or it could be, oh, this is a low profit business and it could potentially go bankrupt, where a lot of current stockholders would want to sell that particular company's stock, which would eventually lower its price. So next, let's talk about what stock selection criteria you can use to actually buy a stock, or numbers that you can look at before you try to find a particular stock. These are just some of the uh, factors that I myself personally look at. So I first of all look at which industry sector does this company operate in. What does the revenue growth look like historically for this company for let's say for the past 3 or 5 years? What does net income look like, especially as a percentage of revenue over the past few years? Next, I try to look at what is the price to earnings ratio. This is how much of the price does it compare to the earnings that it's generating. So a high growth stock would have a high PE ratio versus a more stable stock would have a low PE ratio. The lower the PE, the cheaper the stock is compared to its earnings. The next, I look at the short interest ratio. As a percentage of all the shares that are outstanding for this particular company, how many of these shares have been shorted by the public? This gives you an idea of how much of a negative sentiment do people have about this particular business. And then lastly, I want to look at what has been the stock return over the past 1, 3, and 5 years. I mean, everything else could be great, but if this stock for some reason is not giving you a good return historically, you would have some doubts about its potential to give you a return over the next few years. So again, this list is not exhaustive, but these are some key factors that I look at before looking for a particular stock to invest in. Let's take a look at an example. I want to look at Palo Alto Networks. So the price of Palo Alto recently was around $184. And the industry that it operates in obviously is technology, but if I were to look at a more sub-vertical, it would be considered cybersecurity. And the past revenue growth annually has been 29%, 25%, 16%, which was the most latest from 2023 to 2024. So it shows, okay, the company has been growing. It has the growth rate has just slowed down a little. The next is how much is it net income as a percentage of revenue. Again, we see back in 2022, it was actually not profitable, but 2023, it had a profit margin of 6%. And then recently in the last year, it was 32%, which is a healthy sign. Next, when we look at the price to earnings ratio, it's 47.6. Ideally, I feel price to earnings ratio between 20 and 40 seem more reasonable, but considering this is a growth company in the cybersecurity sector, so obviously its P ratio is a little higher. Next, its short interest ratio is around 3%, which seems pretty standard, relatively in a low range, I would say. Usually if it's touching 10%, like any double digit would be a sign of alarm. And then lastly, if you look at its return of 9% over 1 year, 129% over 3 years, and then 356% over 5 years. So that's a very healthy return. Now let's contrast this with another example. Let's look at Chevron. So Chevron is priced around $158. Obviously, it operates in the energy sector, but specifically under oil and gas. It has seen a revenue decline in the past year from 2023 to 2024. However, it had very high growth rate in revenue in the prior 2 years before 2023 of 65% and 51%. If you look at net income, it has relatively been consistent, 10%, 15%, 11% in the past 3 years. Price to earnings ratio is relatively low, which is a good sign, but obviously it operates in the energy sector, so there's a lot of stability there. So that's why it's at 17. The short interest ratio is also pretty low. It's around 3%. And then if you look at the return over the past year, it has 16%, 38% over 3 years, and then 71% over 5 years. It's decent return, but if you were to compare it to the S&P 500, I think the S&P 500 did better than Chevron's returns. So maybe you would be just better off buying the S&P 500 ETF than individually investing in Chevron. Chevron does pay a relatively decent dividend at around 4%. So that is something else to look into if you want more of a dividend income coming through. That is something you could consider when buying the Chevron stock. These two examples should give you an idea of how to go about analyzing a company before you buy your first stock. Obviously, there's a lot of other factors to consider, or you can do a more detailed analysis. And that is something I plan to cover in future videos. But for now, this should at least get the ball rolling and get you into that investing mindset of what your investing philosophy is and what do you need to analyze when you buy a stock. All right, guys, thank you for listening, and I'll see you in the next one.